Hi, Max Keiser. This is the Keiser Report. Zippity-doo-dah. Happy days are here again. Summertime is upon us, and the news gets great every single second of every single day. I can't believe how great everything is. Stacy.
Max, in the last episode, we were talking about Germany falling apart and Deutsche Bank, which is basically all of Europe, in fact. Now we're going to talk about Italy. But first, I want to set up the whole global situation with a tweet from Zero Hedge, and I was talking about the investor Gunlock, and he said that before each of the last three recessions, one market peaked, first Japan, then Europe, then emerging markets. Now it will be the United States. So that's really quite interesting. Here's the Japanese market, crash, recession. Here's the European market, and then the US. It's an interesting look at perhaps we could be seeing the US head us all into global recession.
Yeah, I remember looking at this chart by Gundlach, and it goes all the way back to the beginning of my Wall Street career. And during these recessions were times when I took years off. Like, okay, so the 87 to 90 hit, that was the Japan peak. Then I was in Paris for 5 years. Then you had a period of growth up until this peak of Europe. Then I went back to the south of France for 5 years. Then I met Stacy. Then we had a period of growth now, and we're seeing that the American peak will hit. So it'll be time for a 5-year vacation again. I'm not sure where, but somewhere. But this is now take our Bitcoin and say adios. Well, into the sunset. I think we're done.
Well, this is in the the context of all these guys like Gunlock selling all their equities. They're getting out and buying bonds, predicting a huge recession, because if the U.S. obviously is in its own space, like it's beyond all of the emerging markets, Europe and Japan, in terms of where their stock price is. Now, over to Italy, which of course has had a catastrophic economic story happening there. And we've been, again, covering this for 10 years. The European Central Bank has managed to keep it afloat by buying all their bad bonds. Some of their bonds, I believe, are at negative interest rates, even in Italy. And yet, if everything is so hunky-dory, Italy proposes tax on savings hidden in safety deposit boxes as total retail deposits hit fresh all-time highs. The Italian people, they have a lot of cash, and they've been putting it into their savings accounts. And more importantly, in Italy, they put that into safe deposit boxes. Salvini is proposing that they basically raid all these savings, these safe deposit accounts, and introduce a tax. If you voluntarily tell the government how much you have in there, they'll do a flat tax of 15%. I don't know what the higher rate will be if you fail to voluntarily disclose it, but they're coming after your savings.
Quick note for those Italians that want to keep their savings: you put it into Bitcoin, you can escape the confiscation of the government or the Vatican or whoever runs the country over there. And you will preserve your wealth. And go to a jurisdiction that respects your sovereignty as an individual and respects your wealth. Don't live in a country that's just going to rip you off blindly. We live in America because they have good speech rights, and we don't want to end up like these other journalists that are being beheaded or jailed. So we like our American passport. But, we prefer that. But if you're in Italy and you want to preserve your wealth, don't live there. If they're going to take it, move to some other area where you can move your Bitcoin and have a life. You don't want to be a part of a neo-feudal slime state of living in dirt and picking, whatever seeds you can out of squirrel poop. You need to get a life. First of all. Second of all, this is a complete repudiation of everything post the Enlightenment, right? So they're saying that markets don't work, that private property doesn't work, and that only the crazy statists with their guns and their crazy theories based on some discredited Catholic cult nonsense. These guys are insane. Don't live there. It's a nutty place. They got good pizza, but don't live there.
But this is a theme that we've been covering for the past 10 years. What we saw in the last episode, Deutsche Bank ran up some bad debts. They made some bad bets, and they lost. But they themselves, Deutsche Bank, was not made to lose. The taxpayers of Germany have been gifted all their bad debts. Here in Italy, again, the banks have made a lot of bad bets, and those have already been perhaps transferred to the ECB. We don't know yet until it all actually falls apart and we get to look at the books. But right now, they're going after the individual, the bottom 90%, and they're going to come and take your stuff. They're going to do like a bail-in that's already in the European laws, that they'll do a bail-in, and this is what they're looking for, they're prepping for, is a bail-in.
Well, they always come to take your stuff. I mean, just to be clear, right? So the Italians that have money in safe deposit boxes, those safe deposit boxes are going to be raided by the state to pay the bankers who made bad bets. Okay, so we saw that in Greece. We saw that in Iceland. They had a different reaction. Iceland actually kicked out the terrorist bankers. Iceland, I think all the Italians should move to Iceland. Okay, it's a different weather. You get, it's not so much pasta, more fish. But you could keep your wealth, move to Iceland. You can buy property there, it's cheap. Don't live in Italy. It's a wasteland. It's all in the south, it's all the mafia. It's horrible.
I love Italy. It's an amazing place. It has great food and stuff like that.
Would you open a bank account there?
No, just like Greece. Greece is also beautiful. It has an amazing countryside, amazing food, amazing weather. And
would you open a bank account there?
But they're not Germans. And the European Central Bank is set up in order to help the Germans, the Dutch, and some of the northern states. As if you read Collusion by Nomi Prinz, she highlights this exactly, and she talks about this. But again, so this intervention by the central banks over the past 10 years, their scheme is falling apart. They have shifted a lot of wealth to the top, and it's the bottom 90% who are having their assets seized. In this case, in Italy right here, they're proposing a tax. Like, it's very blatant and it's obvious and at least it's transparent. They're saying, we're going to take your money, okay? In the United States, there's this, we have the exorbitant privilege of the world's reserve currency. So they are allowed to print and allowed to say, look, the average wealth is going up. The average income is going up because the wealth of Jeff Bezos is rising. In 2008, it was like 45 billion. Now it's 150 billion. How did that happen during this time? So I want to look at this story that came out in the past week, and that's from Jesse Eisinger. And he looked at a property that Donald Trump, his company, owned in Beverly Hills. And he saw a case of individual corruption, not systemic corruption. I posit that this is systemic corruption. So he notes that the price of Trump's Beverly Hills mansion was assessed at last year, $8.3 million. Trump's Indonesian business partner secretly paid for the property a couple weeks ago, $13.5 million. This is the property that Trump owned in the flats of Beverly Hills, right near off Rodeo Drive. His company bought it for $7 million in 2007, and now it's worth $13.5 million. Jesse Eisinger looks at that and thinks, this must be corruption on Trump's part. It must be him individually being paid way more than the property's worth, thinking that $7 million property must really only be worth $8.3 million 10 years later. But if you look at all the properties all around it on Zillow, you find out that they also doubled since 2007. All of these properties, I sent him this. This is from Zillow. All the properties around him have also doubled. And in fact, this is what the elite are getting. This is what the likes of Donald Trump, who's now worth $3 billion, what they get from the Federal Reserve, how the intervention looks for them. Remember this inflation-deflation debate. Zillow estimates that property that Trump sold was worth anywhere between $10.12 million and $11.66 million. So this Indonesian guy perhaps did overpay. But what they're showing is that the last 30-day change, the property prices in that area are going up 1.2% a month, which on those wealthy big mansions equates to $131,000 a month.
Right, so this guy, Jesse Eisinger, he had a conclusion first, yes, and then he filled in his fake news to fit the conclusion.
Yes.
And you're saying, look, there is a story here. It's the systemic breakdown of economics and price discovery through central bank flooding the market with phony, fake money. That's the story.
Yes.
It also reminds me of Naomi Wolf. She's a famous feminist. I think her name is that, isn't it?
Naomi Wolf.
Naomi Wolf, yeah. So she came out with a book where she jumped to the conclusion. It's about homosexuality in England in the 1800s. And the punishment thereof. and she misread the law and made the absolute wrong conclusion and was pilloried for this. Well, not pilloried, but in a very English understated way, had her face ripped off on a live radio interview in London. But again, she had the conclusion first.
Yes.
And then you fill in the fake data and the fake news to support it. But markets, everyone learns this from the stock market, right? So in Goldman Sachs, they pick a price first for where they want the stock market to be or where they want gold to be, and then they fill in the trades to get to that price. There's no price discovery, just like there's no journalism. There's no investigative journalism anymore. You just have people who make incredibly inane conclusions and then fill in fake facts to get to those conclusions. So in that regard, Trump is correct. There's very little outside of just pure fake news, if that's not too much of an oxymoron. Just say it's fake news. And that's, unfortunately, it's spilled over into every nook and cranny. Every orifice of society is now jump first and then fill in whatever lie you need to get to that fake conclusion.
Again, when you tune into the cable news here, they are so, or look at geopolitics. They hate Saddam Hussein. They hate Gaddafi. They hate Trump. He's an orange guy. And it's him individually. It's not the system. You, the viewer out there, do not question the system. This system is perfect because this elite journalist in Washington, D.C. or New York, where they all live, it benefits them. So they don't want to look at that system. They don't want to condemn that system. They want to condemn individuals who we all can agree has funny hair, or they're fat, or they're ugly in some way, and they're vile in one unique individual trait of their personality. And that is the reason why his property price is going up $131,000. He's uniquely corrupt. It's not our system which is uniquely corrupt. Don't question the system.
Yeah, right. So, and you never get anyone questioning the financial system for sure, because you have a financially illiterate population that can't add 2 + 2, right? So now you just bamboozle them very, very simply on every major mainstream outlet. You can bamboozle folks into believing this nonsense, as you have pointed out very succinctly. Well, we're going to take a break. When we come back, much more coming away. Don't go away. Welcome back to the Keiser Report. Time now to turn to David Morgan of the Morgan Report. David, welcome back.
Max, it's great to be back with you and Stacy. Thank you.
All righty. So, David Morgan, the gold-silver ratio recently hit about 90. What's the significance of this, if any? And do you think gold will drop or silver will rise to return the ratio to its historical average, David?
First of all, it's a 26-year high. But if you look at it, and what does it tell you? There's no doubt what it really tells you. If you could argue it's meaningless, it's meaningful, I don't care. The fact is, it tells you how much silver it takes to buy an ounce of gold. So right now, it takes about 90 ounces of silver to buy an ounce of gold. Whether that means silver undervalued or not, I would say it is, but you can make that argument. What I really wanted to point out was, if you go back to the Silver Bonanza, my friend Franklin Sanders' book, way back, I think he published in 93, and you look at the ratio, gold-silver ratio, for the 1300s, 1400s, 1500s, 1600s, it was a 12-to-1, which is the natural ratio. That's how it came out of the ground. So for 1,000 years, and another 1,000 years, and another 1,000 years, and another 1,000 years, the ratio was 12-to-1. So we have 4,000 years where the ratio was 12-to-1 when they were used as the same thing, money. And then we got a little more sophisticated, more coinage, et cetera, and we went to the Bank of England where Sir Isaac Newton, got the bank back on the gold standard, and the ratio had gone to about 16-to-1. He deemed it 15.5, and that's what I call the monetary ratio, and it remained there for a while. So if you look at it from a historical perspective, it's only been in the last 100 years or so we've had these, I don't know if they're anomalies or not, factually, where we've been above, much above the 16-to-1 ratio. And of course, we actually have hit about 100-to-1 a couple of times. So when it was demonetized, that's when silver started these rather significantly big changes in the gold-silver ratio.
Many argue that the silver has been completely demonetized, and so it should trade more like an ordinary industrial metal like palladium, and so the gold and silver ratio no longer matters. Your thoughts?
Well, it's still a monetary aspect. I was given kind of a debate by one of the young up and comers. Very nice guy, pretty thoughtful about silver being money or not. And of course, I had to take it to. Got a little help. I never said I know everything. Went to one of the best constitutional legal people in the world, in my view, Dr. Edwin Vieira, and we discussed it. So there's two aspects to it, Max, and I'm not trying to complicate it. I'm just trying to make it real simple. Legally or economically. Legally, silver is money. No ifs, ands, or buts about it. It absolutely is legally money. But I'd be kind of stupid to go into Walmart with a legal tender 1 ounce U.S. minted silver eagle, put it on the desk and say, here's $1, which they would have to accept legally for, half a pack of gum. But I could do that. And it's absolutely legal. The other part, which is more important, is it economically money? And the answer is really not, because of what I just said. Who would be in the right mind put down something that's, got a much higher value in the open market than it has on the face value of that coin?
Bitcoin is not legally money, but the community is making it legally money because it's got a lot of community support. Why can't the community get behind silver?
I don't know. I kind of tip my hat to you, Max. I mean, when we, did the buy silver takedown J.P. Morgan, I think it added a lot of people's awareness of, silver's potential to be reintroduced as a monetary asset. But as we all know, it didn't go our way, you might say. However, I think there will be a resurgence of silver as money, because once gold starts to take a run, then the people that are attuned to the gold move will move into the silver because it's a better value and it's cheaper. It's more easy to afford. So I think there is still that monetary aspect. And look, I'll be the first to say silver has a dual purpose, primarily industrial. 60% of silver's usage right now is industrial usage. So only, if the other 40% is monetary, that'd be less than half, and it isn't. You've got jewelry and you've got silverware. So the monetary use of silver is really around 10, maybe 15% of the total, but it's still got that amount. And again, it's such a small market that if there was a rush in the gold, I think the spillover into silver would be rather significant.
So let's talk about kind of like how the U.S. dollar fits into all this. So the dollar continues to rise. The most quoted index is now over 97. And, where is this going? Where's the dollar going? And also, it's important to understand, we're talking about gold and silver priced in dollars. If you're looking at gold, it's making new all-time highs priced in Australian dollars. It's making close to new all-time highs in Canadian dollars and in Russian rubles. And there are a number of currencies where it's at or making new all-time highs. Only the U.S. dollar, do we see this lagging? But the U.S. dollar is the world reserve currency. How important is the dollar to this whole thing going forward, David?
First of all, where's the dollar going? The dollar is going in the dustbin of history, like all fiat currencies. It's just going to be the last one to get there. And so, as you said, vis-a-vis other currencies, gold looks pretty good. The dollar is strong for a variety of reasons, primarily because we have special access to be the world's reserve currency, and it has to be accepted in most of your commodity trades. However, it's at a lower level than it was, say, back in the early 2000s when it was 120 on a dollar index. Right now, I think the dollar will maintain some strength to some weakness, but I ultimately believe when the liquidity squeeze comes, when the next 2008 crisis hits, when the manic buying of real assets takes place, that the dollar will actually strengthen. The reason why is because it's a liquidity squeeze and people go to what they trust the most. Most people, unless they listen to Max Keiser or others in our peer group, have no idea what really goes on in the fiat system. They just are clueless. And so what takes place is people sell their bonds, sell their stock, sell their house, sell their car, sell anything for dollars. So you'll see a run to gold and a run to dollars at the same time. And many people will say, my, that can't be right. How come the dollar and the gold are going up at the same time? It's because there is a run to what you trust. There's a run to capital that's understood. Then what will take place later, and I don't know how much, it'll be a week, 2 weeks, 2 months, 6 months. I doubt it'll be 6 months, but it'll be some period of time where, wait a minute, these dollars aren't buying me as much, and gold is accelerating, vis-a-vis the US dollar more than these dollars are. So that amount of dollars, no one knows the exact amount, but some amount of that dollars will move into the gold market. That's when you get the acceleration into gold and you see the dollar's demise really take place. Does the dollar go to absolute zero? No. No, I think the powers that be are too aware of what really takes place in these fiat systems, and they probably have a plan A, B, or C. I don't know. I'm not privy to the upper echelons of the deep state and how their thinking goes on this banking cartel. What I do know is if you look back at the BIS about a decade to 12 years ago, they only accounted for member banks in gold. They could care less what their foreign currency exchanges were. They could care less what fiat they held of other countries. All they cared about was how much gold was in their bottom line. Now you don't hear that anymore because it's secret now. But the BIS, is the banker's bank, as most of us know, and that's how they account for things. They don't account for it in stuff you can print. They account for it in gold.
Oh yeah, there's still the unit of account among central banks is gold. And, there's so much of this fiat money that's been printed. I heard somebody recently mention that the amount of money that's been printed in the last 15 years versus the way that the gold stock reflected the amount of money that had been around in the system back in the 30s, you'd have to make the conclusion that gold at $1,300 an ounce is roughly equivalent to gold at $35 an ounce. In other words, there's so much money, there's so much of these derivatives and funny money and fake money that versus the actual known above ground quantity of gold. Gold hasn't been this cheap since it was $35 an ounce relative to the amount of this bogus fiat money, David.
Exactly. I mean, that's where silver was when I started the website. I mean, silver on an inflation-adjusted basis was cheaper than it was during the Great Depression, even though it was like under $5. But that $5 value was less purchasing power than 22 cents was during the Great Depression. And you're basically saying the same thing. I totally agree with you, Max. There's a lot of upside to the gold market and the silver market, and it's just a matter of time. The 2008 crisis was never really solved. I mean, we had a debt issue. It was primarily subprime mortgages. Everyone that, listens to these probably seen The Big Short. And what happens is they made the problem worse. I mean, the banking establishment, be it your local bank or your central bank or your national bank or, all the way up the chain of the BIS, everything took place to just make more debt, paper it over, loan, more fiat basically into the system. The reason most people are really misunderstood what took place is because it was sterilized. This went to re-liquefy the banks, but it never really hit Main Street. It went to Wall Street and to liquefy the banks. It didn't go on to the main public where their wages were increased or that type of thing. In fact, there's pressure on the downside due to China and competing currencies and the way the world's working now relative to what it was, let's say, in the 70s when I started in the workforce, and everyone that was in major industries, major corporations were given a COLA, a cost of living allowance adjustment to their wages. I think it happened every quarter or every half year or so. So we thought at that time that, as this inflationary pressure continued, you would continue to get higher and higher wages to kind of go along the lines of the Weimar Republic, where, you might not stay exactly with the inflation rate, but you were at least told that we were, going to make your wages continue to increase as inflation accelerated. That, of course, stopped a long time ago.
Well, the wage earners are the new, existential threat in America, and they probably will not, have a very glorious end. But let's, in the minute we have left here, the stock market are signaling one thing, economic growth. The bond market's signaling a completely different outcome. These two are completely showing different outcomes. Your thoughts?
Well, the bond market's the key, Max. And the bonds are really saying, like, we got problems ahead. We got this inverted yield curve. There's a recession built in. There's guarantee of that. And once the bond market starts to falter, everything else will go along with it.
But it has started to falter. It's in existential crisis, the bond market. It's negative yielding. They got negative yields in Europe. How much, where is this all going to go? David, it doesn't, in other words, it's already gone past the event horizon of a catastrophe.
Well, maybe it has. The markets haven't I haven't said that. I mean, they're just kind of pretending, like Jim Sinclair likes to say, extend and pretend, extend it out and pretend that everything's okay. And of course, as you stated, it's not. But I don't think it's hit the bond traders enough to where it's, been a crisis where we see it, in the mainstream financial press where they say, look, we got a real problem in the bond market. Yes, you're correct. There is one, but I don't think it's had any repercussions yet. But these things are subtle at times. I mean, sometimes a small change has a big, big difference over time. I just think we got to give it more time before, this mess starts to unravel even further than it already has.
Well, thanks for being on. We'll have to have you on another segment if that's okay, but thanks for being on this part of the Keiser Report.
Thank you.
All right, that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I'd like to thank our guest, David Morgan of the Morgan Report. You can reach us on Twitter at Keiser Report. Until next time, bye, y'all.